How can a tiny piece of gadget, AirPods, often misplaced in couch cushions, could out-earn the entire corporations? Welcome back to WellPod X. Tony here. It's 7th of March 2025. Here we talk about everything money, investing, crypto, and psychology. If you're interested to stay ahead in the finance game, hit the subscribe button. Now let's dive into today's market update. Bitcoin has taken a hit, dropping 6% to 88,000 at the moment, and Apple is holding at 235. We'll talk more about why Bitcoin is going south later in our news segment. Now let's get into today's morning deep dive. It's funny how a tiny piece of plastic in your ear can turn into a multi-billion-dollar empire. But that's exactly what Apple pulled off with AirPods. What started as an accessory becomes quite an icon of its own now, and more importantly, a financial powerhouse. Back in 2016, Apple did what Apple does best, forcing change on the world and making us pay for it. They removed the headphone jack from the iPhone 11, and the internet lost its mind. People mocked the decision, calling it pointless, inconvenient, and a cash grab to push wireless accessories. Some even predicted AirPods would flop because who in their right minds would pay $150 for something so easy to lose and look kind of like an electric toothbrush head? While these critics were busy complaining, Apple was quietly building an entire new empire. By the time people got used to the ideas, AirPods weren't just accepted, they were everywhere. Today, whether you're on the train, in the gym, or walking down the street, AirPods has become as common as iPhone themselves. And the crazy part is, AirPods alone make more money than some other big companies. In 2023 alone, Apple raked in $18 billion from just AirPods, putting them ahead of Spotify, Nintendo, and eBay. And this isn't just a one-time spike, this has been consistent year-over-year growth. If AirPods were a standalone company, they'd be one of the most valuable audio brands in the world. And yet for Apple, it's just one product line among many. As we all know, Apple don't just sell products, they take over the market. In the true wireless sound market, AirPod dominates with a 34.4% share in the US and 19% globally, ahead of competitors like Sony 70%, Samsung 16%, and Bose 10%. And we all know this isn't just because of the sound quality, it's the strength of Apple's ecosystem. If you own an iPhone, it's just so much easier to buy an AirPod. They pair instantly, switch seamlessly between devices, and are designed to make non-Apple alternatives feel very clunky. It's the same strategy Apple used with Apple Watch, iPads, and even MacBooks. Once you're in, you're pretty much in. Now, I don't have a huge position in Apple, but it's in my portfolio for one simple reason. Warren Buffett's moat theory. Buffett always says that a great business would have a moat, something protected from its competitor. For Apple, the moat is its brand, ecosystem, and pricing power. They've built an entire world where their product works best when used together, making it hard for users to switch. The company also knows how to print money, not just by selling new devices, but through services, accessories. And we have a video talk about Apple's stock buyback that keeps rewarding shareholders. Make sure to check that video out. Last year, they have set a quarterly record in buybacks, one of the largest repurchase program of any US company in the past decades. With that said, while Apple is a cash-generating machine, its growth has slowed compared to peers like Meta, Nvidia, Tesla. That's why I don't go all in, but I keep a small position, because if history is any guide, Apple will probably find another way to reinvent something ordinary and make billions from it. Now let's take a quick look at today's news. The first news, social sentiment toward Ethereum has reached its lowest point in the year, according to data from Sentiment. While this might seem concerning, such negative sentiment has historically preceded market rebounds. Investors are advised to monitor this trend closely, as they could signal potential buying opportunities. We've already mentioned multiple times in our previous video that we've been keep buying and DCAing Ethereum ever since it come down to $3,000 range. So the question is, have you been buying as well? Let's discuss in the comment below. The second news, Bitcoin has now dropped over 6% today, bringing the price to $88,000. The drop follows a recent executive order signed by US President Donald Trump, establishing a strategic crypto reserve. The order mandates holding existing Bitcoin assets without specifying further purchases, leading to a market uncertainty and a subsequent price drop. The third news, David Sachs, now serving as the US Crypto Czar, the man behind facilitating Trump signing the strategic reserves, has confirmed that he sold all his cryptocurrency holding before taking his position. The move does align with government ethics rules to prevent any conflicts of interest as he helped shape the US crypto policies. Sachs has been a strong advocate for blockchain innovation and regulatory clarity, and his appointment signals a push for more structured policies in the space. With his background in tech and venture capital, many will be watching how his leadership impacts the future of crypto regulations. That's a wrap for today's episode. Please subscribe for the latest market updates. Stay invested, have a nice weekend, and I'll see you next Monday.